What's up, Theta Gang? Welcome back to the channel. My name's Jason, and today we're going to go over the 10 things I've learned since I started option trading. We're also going to do a little recap of what happened with the trades that I placed the other day. As you can see, the portfolio value has dropped even further. The price of Apple has come down from its highs of around $140 all the way down to $107 this week. We thought it would stay around the $110 mark because of the support from the 50-day moving average, but it looks like the price is going to break below that today. So the next major level of support will probably be around the $100 mark, and then if we obviously break that, we're looking for the 200-day moving average. I mean, if it does drop that low, it's going to be a great buying opportunity, but not quite conducive for a good time right now for my account. So if we go and look quickly at what happened from the trades I placed the other day, the covered call that I placed at the $130 strike price never got filled at $4, and the price basically moved away all day, and I couldn't even get filled at about $3 on that, so I just let that trade expire. The put credit spread that we sold, that we got $15 a premium, we just had to close out for a loss. The price of Apple just kept coming down so far that we'd gone into our max loss territory, so I decided to close this trade out before the end of the day and suffer a max loss. So if we take the $98 that it cost me to close this trade from the $15 I was paid, we're looking at a net loss of $83 there, which obviously isn't ideal, but this is what happens when we trade the stock market, especially in a really bad week. We can look at SPY. SPY this week has generally been on a downtrend from 342 to 330. So the whole market is pretty much sold off all week. So it's not been a great week for me holding the 100 shares of Apple, but hopefully next week we'll see some green and we can recover the loss that we made on that spread. So this brings me to what I wanted to talk about today, which is the things I've learned in the sort of first 6 weeks of trading options. Holding the Apple shares is definitely the main reason why we want to only run the wheel on quality companies. So lesson learned number one is only run the wheel on quality companies you don't mind holding for the long term, that preferably pay a dividend. This is definitely the case. I do not mind holding 100 shares of Apple. We've got the iPhone 12 release coming up soon, so within the next couple of weeks, I imagine that the price of Apple is going to recover. I know a few people have uprated their ratings on it, so we're probably going to be looking at the $140 mark plus over the next coming weeks. So again, only run the wheel on companies you want to hold. So lesson number two that I feel like I've learned from this Apple trade in particular is maybe don't tie up your entire balance on one trade chasing high premiums. My account before this Apple trade was around the $13,500 mark. I got assigned the 100 shares at $128.75, so this took almost $13,000 of the account. As you can see, my buying power is only $300 right now. So I think in the future I would rather basically halve what my balance is. So if I had $13,000, I'd probably do a max trade of around $6,500–7,000. That way, if I do get assigned and I'm holding something for the long term, I've still got a way of generating income by selling puts on another stock, or even straddling my position and selling covered calls and selling puts at the same time on the same shares. Number 3, I think one of the most important things is to have a watch list of companies that you want to run the wheel on. If you monitor these companies, as time goes by, you basically get a good feel for how the companies react, how their price sort of trades, the ranges that they fall into, and over time, you will get a better feel for companies, and you will be able to more successfully estimate what will happen when you place a trade, and therefore not end up on the wrong side of a trade. Number 4, definitely do your research before you run the wheel on any company. Make sure that you do your research. When important events like earnings, dividend payouts, even like presidential elections are, so that you're not caught in a trade that goes opposite of where you thought it would be. More often than not, that sometimes we can overlook these things and get caught out. Number 5, I would say definitely learn some technical analysis. The MACD, the RSI, the moving averages, they're all a great place to start. I used to trade Forex, so I used to do a lot of technical analysis back there. I don't rely too heavily on it, but definitely learn the basics of moving averages, the MACD, the RSI levels, and basic support and resistance. I mean, these will help you out, but I'm not somebody who completely relies on them for when to place a trade. Number 6, develop some concept of your own personal risk tolerance. This is something I learned early when I was Forex trading. I read a book by Mark Douglas called Trading in the Zone, and this was a really great book. He really lays out the risks of trading and how you have to accept loss as part of doing business. That way, if you define your risk before the trade, you're less likely to interfere with it. Because more often than not, we set a trade and then we'll monitor it, we'll try to adjust it, we'll think, let's close it, like it's not going right, or we let it run too long and we're in a really good profit, and then it turns around and we end up in a loss, or not making as much as we could be. So I really recommend reading Trading in the Zone by Mark Douglas. I'll leave a link below for the book, but that was one of the books that definitely set my mind right when it came to risk tolerance. Number 7, don't treat closing a trade for a small loss as failure. In my opinion, if you can recognize early that a trade is not going to go your way, it's better to take a small loss than a max loss. So if you can identify this relatively early, don't consider it a failure. Consider it more that you're a smart trader, and you even though you made a loss, you saved more money in the long run. Number 8, I would definitely say I've been guilty of this on many a time, but don't spend all day watching a chart and watching every tick of a price just because the trade's going against you. This can cause severe stress, it can suck up your whole day, and it really does take the enjoyment out of trading. So I would definitely say, I'm more of a set it and forget it type of trader. I definitely, choose my trade, I do my analysis and choose my trade, and then define my risk so that I don't have to monitor the trade, because if it does go against me, my risk has already been defined and I'm accepting that loss when I place the trade. So that's definitely one thing I would strongly advise you get used to, is the whole set it and forget it mentality. Number 9, I would definitely say invest in yourself. take some of the premiums you earn and the money you make, buy a few books on trading and investing in general. I mean, there's obviously many different strategies, long-term investing, dividend investing. One of the books I read that really changed my perspective was The Millionaire Next Door. I was somebody who often, would spend everything I earned, often on things I didn't need. But it wasn't until I read that book that it sort of sunk in that I should be spending my money on productive assets, so my money made money, and that way, you can see your accounts grow, and when your money starts making money for itself and you don't have to do anything, especially with dividends, while you make money while you're sleeping, that is, once you start seeing that come in, you'll just want to keep adding to that pile of money, so your money grows and grows and grows, and eventually your money starts taking care of you. Again, there's some really good books I've read. I'll put some links in the description, and you guys can check them out if you want to. And basically, the last thing that I've learned in this first 6 weeks of trading is don't give up. Everyone has bad weeks. It's a part of trading. As long as we make smart, informed decisions, we'll win in the long run, especially if our losses teach us something. I know some of you watching have definitely experienced one or two of these lessons firsthand, but I hope a few will make you think about your trading style and personal risk tolerance. If you have any lessons you feel like you learned over your trading career, please let me know in the comments below, and then as a community we can help each other out and grow. That is it for today, guys. I just want to take a quick second to thank everyone for watching. And I want to give a shout out to all the people that have subscribed to my channel. As a relatively new channel, I really appreciate all the support. If you haven't currently subscribed, please consider doing so. It will help the channel grow quickly so that people can find these videos and hopefully gain some value from the lessons that we all learn trading the wheel. Have a great weekend, guys, and I'll catch you next time.